Well, good morning, everyone. Thanks for joining us today. My name's Rich Weber. I'm a partner with Baker Tilly, and I'm a leader in our government contracting and aerospace and defense practice. We're excited to team up today with creative technology and design to really talk about something really every manufacturer in the defense supply chain is feeling right now, and it's really about compliance pressure. So, I would say over the next hour or so, we're going to walk through really what's changing in the regulatory landscape, how your manufacturing systems play a critical role in audit readiness. Then we're going to go over some risk management items and monitoring. And then we're going to show some system visuals really demonstrating how a modern ERP, can actually enforce compliance without really slowing production. So with that, I'll pass it over to Mary Chris to introduce Creative.
Thank you, Rich, and welcome everybody to our webinar today. Creative is a manufacturing partner. You can see here that we have a heavy concentration in defense and in aerospace and in compliance. You're going to learn a lot today about compliance and making sure that your manufacturing systems are ready for compliance, and we look forward to helping you along that journey. Okay, so we have a long list of customers that we help because we've been doing this for over 20 years. And we feel that technology and compliance is more important as we get into late 2025 and throughout 2026. So timing is critical. Timing is key. I look forward to connecting with you after the webinar, and we can talk more.
Great. Well, thank you so much. Before we get started, I wanted to share a little bit on my background. I've spent almost 25 years, I hesitate to say, in public accounting and industry. Hard to believe that's the number, but I've held some senior finance leadership roles in public companies where I've assisted with ERP implementations and really internal controls programs. My work at Baker Tilly is focused on really helping government contractors navigate, income tax compliance, FAR and CAS requirements, prepare for DCAA audits. I work in optimizing indirect rate structures and really aligning ERP systems with compliance expectations. So the perspective I'm going to bring today is really kind of practical and operations focused, but what actually works for A&D manufacturers and what pitfalls to avoid really as contract requirements become more and more complex. So, who is Baker Tilly? Sixth largest CPA firm, recent merger this year with Moss Adams. Now we've got over 11,000 professionals across really all 50 states. And we've got an international network as well. One of our big areas of specialization is really in aerospace and defense and the broader government contracting community. So our teams work with everything from small business subcontractors all the way up to billion-dollar kind of prime contractors. So, and we really don't just help companies meet compliance obligations. We really, the goal is to help modernize systems, automate processes, and really use compliance as more of a competitive advantage. So when we talk today really about being, quote, ready for compliance, the focus is really on how to build these capabilities in a way that really supports your business, improves visibility, and really strengthens operations. So now we can kind of set the stage. A&D manufacturers are really in a growth phase, to say the least, and really the compliance landscape has changed more in the last 5 years than it did over the previous 20. So we're really seeing a major increase in regulatory oversight across the board, despite what you see at the federal level and the overall procurement landscape, compliance is still a very big item. Agencies like the DCAA and DCMA have really stepped up their expectations around audit readiness, documentation, and really systems controls. It's no longer enough to simply have compliant policies. Auditors really want to see that your systems and your day-to-day operations are aligned and really producing consistent, traceable data. And they're asking tougher questions than they did a few years ago. We're seeing greater flow down requirements from prime contractors. Primes are now being held accountable for really their supply chain's compliance posture, especially when it comes to cyber, cost data and CUI handling. So as a result, they're really pushing those same expectations down to subcontractors, and even tier 3 and tier 4 suppliers are now being required to show evidence of FAR, DFARS, and increasingly CMMC compliance before they're really allowed to quote or participate in long-term agreements. So in a lot of cases, the flow down requirements from the primes are even stricter than what the government directly enforces. And that's really because the primes are protecting their own audit exposure. So another big shift is really the rising expectation for data transparency. Contracting officers, auditors, and primes all really want real-time visibility into cost, schedule, labor hours, material traceability, really everything. And so the industry is really moving toward a model where data needs to be accessible quickly, cleanly, and really in a format that supports audit trails. So if your systems can't produce the level of transparency that's required, or if it takes days of manual work to pull it together, that really becomes a competitive disadvantage. So, the last box here on the slide, digital transformation, it's become really clear over the last few years that that's really the compliance driver, and it's not just a technology initiative. Companies used to see ERP modernization or system upgrades as operational improvements, but now they're really tied to compliance, and the government wants electronic records. Auditors want to follow a digital trail. CMMC, which we'll get into in a fair amount of detail later, requires evidence stored in secure digital environments. And the primes want to integrate with suppliers using standardized digital formats. So really all of this means your compliance readiness is really determined less by what's written in the policies and more by what your systems can actually prove. So, the landscape that we're really in today is really one where manufacturers need to demonstrate operational discipline, data reliability, and system-based controls just to stay kind of competitive in the defense industrial base. So I meant to note at the top there that if you have questions, feel free to kind of put them in the chat, as we go along here. Happy to break it up and answer during, and if I don't get to it during the presentation, I'm happy to spend a few minutes at the end. So, why compliance starts in the system. When you look at most of the issues that show up in like a DCAA audit, whether it's unallowed costs slipping through, errors in labor distribution or kind of inconsistent indirect rate application, or just incomplete documentation, almost all of them trace back to the root cause of system design. And so you can kind of let that sink in for a minute, but the reality is that compliance breakdowns typically happen because organizations are really running key processes across disconnected systems. I mean, I've seen it my entire career, wherein even non-defense related companies have systems that are all over the place. And in the GovCon community, timekeeping lives in one platform, payroll is processed somewhere else, job costing is in a separate module or a spreadsheet, God forbid. Purchasing data is coming from a completely different tool. And really, when those systems don't speak to each other, it becomes really difficult to produce the reconciliations that auditors really expect. And so the DCAA is simply looking for a clean, traceable path to get from the source transaction, like an hour of labor or a material issue, all the way through to the general ledger. Indirect rates, billing, and ultimately the incurred cost submission also flow through that system. And so I'd say when the data lives in multiple systems, you're forced to rely on manual reconciliations, exports, VLOOKUPs, and one-off spreadsheets. And that's really where the risk comes in. So manual processes kind of introduce timing differences, errors, omissions, and really inconsistencies. And that's exactly what the auditors are trained to look for. So really, even if your team's doing everything correctly, the appearance of inconsistency can really create audit exposure. So that's where an integrated ERP system kind of changes the equation. Modern ERP platform, can embed the cost accounting logic directly into the workflow. That means every labor entry, every material issue, every PO, every subcontractor invoice is tagged with the correct project account, work order, part number, cost pool, burden rate, and approval path kind of automatically. So if you think of it this way, instead of cleaning up data after the fact, the system prevents errors before they happen. So to give kind of an example, if you've got an employee that logs time, the ERP enforces which projects or operations they're allowed to charge. When materials issued, the system automatically assigns the right part, the right job, the right GL account, and the right indirect rate. And when overhead's applied, the system uses the correct burden structure consistently every single time. And because all this happens inside a unified system, you get a full digital audit trail without really any additional effort. And auditors can see who did that. They can see who did what, when they did it, how it was approved, how it flowed through the financial statements. And so when you say compliance starts in the system, what we really mean is that your system architecture determines your ability to demonstrate compliance. So if the system's designed well and the processes run through a single integrated ERP, compliance kind of becomes a natural byproduct of doing business, not a scramble during audit season. So this is why so many A&D manufacturers who modernize their ERP systems really quickly see improvement, not just in compliance, but in overall operational accuracy and really efficiency and confidence in the numbers and the financial statements. So regulatory focus areas. So, we'd like to spend a few minutes on this one, kind of walking through the major regulatory drivers that are really shaping the compliance expectations for A&D manufacturers. Each of these areas is really kind of become demanding over the last several years, and they all tie kind of directly into how well your systems are set up to support them, right? So if we look at the first one there, DCAA audit readiness, and indirect rate support. So, the DCAA is increasingly focused, not just on whether your indirect rates calculate correctly, but really whether your system environment supports those rates with consistency and transparency. So they kind of look closely at how labor is captured, how timekeeping ties into payroll, how material costs flow through job costing, how indirect pools are applied throughout the life of a contract, and if your system can't show that those steps happen consistently and and that they can be audited back to supporting data, you're really going to see pressure in an audit. And so, DCAA expects the system to tell the story, they don't expect to see kind of a collection of spreadsheets, which I've seen at a lot of our small business clients. The second part of this is FAR Part 31, and the principles of allowability, allocability, and reasonableness. If you're not familiar with those, terms, you should read FAR Part 31 in your spare time over Thanksgiving. This is really the foundation of federal contracting, and FAR 31 really determines what costs you're allowed to charge the government, when the costs can be charged and under what conditions. So what's kind of changed in recent years is a level of documentation expected to justify that a cost meets the tests. And FAR compliance is now less really about having the right policies and more about whether the system can demonstrate that a cost was captured, coded, approved, and billed correctly. So auditors really want to see traceability. They want to follow a cost from the originating transaction all the way through to the GL and ultimately to the invoice to the government. So the third section on here, CAS, cost accounting standards. A lot of firms assume that CAS applies only to large defense contractors. And really more and more mid-sized firms are falling into the CAS coverage category as they win larger, more complex or multi-year awards. CAS is really all about consistency. How do you estimate costs? Consistency in how you accumulate costs, consistency in how you report costs. And if your ERP system isn't aligned with your estimating tools, your timekeeping system, your procurement data, your job cost structure, CAS compliance becomes really difficult. And I would say, once you're CAS covered, you're required to maintain that consistency across every contract, not just the CAS covered ones. So that's definitely a tipping point. DFARS and cybersecurity and information controls, this is kind of the last major area of focus right now. DFARS 252.204, 7012 and 7020, both require strong system level protections for CUI, things like encryption, access control, audit logging, incident reporting, secure transmission of sensitive data. And if you handle CUI, you also have to comply with NIST 800-171. And so that means, auditors want evidence, and really increasingly automated evidence, that your systems enforce those controls. So this is kind of where ERP, data storage, user access, integration points all really become compliance factors. And the government wants to know not only that CUI is protected, but how the system enforces that protection. And I would say the last thing on this slide here, digital record retention and traceability. Gone are the days of kind of, manual paper, files being acceptable for audit defense. Agencies really expect digital records, digital audit trails, digital approvals that they can trace quickly. And your ERP system really becomes the backbone of that traceability, holding the reference data, the supporting documentation, and really the transactional history that really reconstructs the life cycle of the cost, of a cost. Because at the end of the day, you're going to hear the word cost like 100 times in this presentation. And that's what, all of this is really about is, okay, how does the government, approve and become comfortable with what you're charging them? So really across all these areas, the other common thread is system alignment, right? If your systems are disconnected or outdated, compliance becomes more reactive and manual. And if your systems are integrated and configured properly, compliance really becomes proactive and embedded into everyday operations. So long-term agreements. LTAs are really becoming more and more common in the A&D supply chain, and they can be a tremendous opportunity, but they also kind of create real challenges if you're not managing costs and pricing accurately over multiple years. So, if we start with the first point, managing pricing across multi-year LTAs, if you lock in pricing for 3, 5, or even 7 years, you're making assumptions about labor costs, material availability, inflation, indirect rates, and really production efficiency. And those, these assumptions stretch really far into the future. So, if your assumptions don't hold, and especially if you don't have good visibility into how actual costs are trending, an LTA can really quietly erode your margins year after year. I've seen situations where a supplier thought they were performing well, really only to discover 2-3 years into the agreement that indirect rates had shifted, materials had escalated, and scrap assumptions weren't accurate, for example, and suddenly the entire program was underwater. Not a great place to be. It kind of ties into this next point here on, comparing estimated versus actual costs. And this is really one of the biggest weaknesses that I see in legacy or disconnected systems. A lot of companies build their cost estimates in Excel or some separate estimating tool. But once the program goes into productions, the actuals live in the ERP, right? And if you're not bringing those two data sets together, frequently and accurately, you really lose the ability to understand whether the contract is performing the way you expected. And modern ERPs really allow you to compare your original estimates with real-time actual costs at a granular level. Labor by operation, material by part number, overhead by cost pool. That's really where you kind of start to see the early warning signs. If you can spot a shift in setup time, a spike in rework, supplier cost increases, changes in excess or obsolescence trends, stuff like that. The third factor here is forecasting long-term profitability. And the LTAs are really marathon contracts. They're not sprints. I ran my first 2 marathons this year, and I can definitely relate to this one. Your ability to forecast future indirect rates, inflation impacts, labor mix, material escalations really becomes essential with LTAs. And a modern ERP system, especially one that's designed for A&D, can really help you model future periods using real performance data, not kind of static assumptions. And this is where we see the biggest advantage of integrated systems. You can quickly run what if scenarios, look at rate sensitivity, evaluate supplier pricing risk, and really forecast how changes in volume affect the overhead assumptions and margin. And this is all strategic intelligence. It's valuable when you're negotiating future pricing, dealing with economic price adjustments, or preparing for follow-on awards. The last point here, driving consistency across contracts. What typically happens in organizations without integrated systems is that each contract becomes its own universe, has its own processes and its own spreadsheets and its own costing logic. That makes it almost impossible to drive consistency across programs or really understand portfolio level profitability. And integrated ERPs can impose discipline, the same cost pools, the same charging rules, the same routing structures, the same labor categories. That consistency really creates cleaner data, stronger compliance, and really better decision making in the end. And it also improves your credibility with your prime contractors who obviously depend on accurate cost and schedule performance from their suppliers. So when we're talking about LTAs and long-term profitability, it's not just about compliance. It's really about protecting margins, improving predictability and strengthening your negotiating position at the end of the day with your customers. And companies that have real-time visibility into cost trends and future profitability are really the ones that maintain credibility and stay competitive, in a multi-year agreement environment. So compliance and performance can really coexist. And this is like really one of the biggest misconceptions that I hear from manufacturers, especially those in fast-paced A&D production environments, is really that compliance slows things down. There's kind of this belief that governance and documentation, and oversight create friction in the organization. But the truth is really that when compliance is built into your systems and your daily processes, it actually does the opposite. It removes friction. So if you look at the idea of governance, built into daily operations. So if your ERP system enforces routing, labor charging, approvals, document control, cost rules, and such automatically, your team doesn't have to stop and think, is this compliant? Right? The system itself becomes the guardrail. And so that theoretically means fewer errors, fewer rework loops, and fewer surprises during audits, because compliance is happening passively in the background without adding steps or really slowing people down. The second piece is dashboards for cost and schedule visibility here, right? So compliance issues really a lot of times show up first as operational issues. What does that mean? Labor overruns, material scrap, delays, inaccurate work instructions, unapproved workarounds, right? So then when supervisors and program managers can kind of see real-time cost and schedule performance on the floor, at their desk, or even on a tablet, they can kind of respond before something becomes a major issue. And this isn't just better for operations, it really improves compliance because auditors want to see that they're controlling the work as it happens, not after the fact, right? Data-driven decision support. A modern ERP provides insights that help managers make smarter choices, not only in production, but in estimating, procurement, staffing, inventory planning, and really indirect rate management. If your data is strong and reliable, decision-making kind of becomes faster and more accurate. And that kind of leads in directly to consistent performance, predictable costs and fewer audit findings. So again, performance and compliance really, reinforce each other. And the key point of this whole exercise is really that compliance becomes an outcome and not a burden, right? If your processes are stable, your system is enforcing the rules, your data is accurate and updated in real time, then compliance just becomes the natural byproduct of running a well-controlled operation. You're not scrambling around before an audit or, retrofitting documentation or relying on kind of tribal knowledge or manual spreadsheets. It really all happens as part of the normal business flow. And this shift we're seeing across the whole defense supply chain. Companies that are winning most of the work and holding on to most of the work are really the ones who've built compliance into their operating model, so that it really supports performance, rather than kind of competing with it. So I'm just going to take a look here and see if we got any questions. So visual demonstration is to follow here, and we're going to kind of show a few visuals from the Epicor ERP system to really illustrate how these controls that we're talking about really work in practice. And as you review the next few slides, you pay attention to how each transaction moves through the system, right? From labor entry to job cost, all the way to the general ledger without manual intervention is the goal. And you'll kind of see where compliance checkpoints are embedded directly into the workflow, really making sure that every cost is captured and allocated accurately. So I'll just go here to next slide. Okay, so, maybe hard to see perfectly on the screen. Maybe teams will let you zoom there a little bit on the system, but what we're trying to highlight is the GovCon specific capabilities that Creative brings to the table. All right, looks like I lost audio there for a second. Sorry about that. Really Creative, the capabilities that Creative brings to the table are really notoriously difficult to manage with kind of generic ERP systems. So if we look at this slide and we're talking about the labor distribution process, one of the core requirements for government contractors is really the ability to calculate fully burdened labor rates, right? Accurately and consistently. That includes adjusted or diluted hourly rates, right? The rate that incorporates actual indirect costs, true cost allocations, and really any retroactive rate adjustments. So, a lot of companies struggle here because the calculations are manual. They're prone to error and they're really not integrated with their project, accounting module. And Creative's solution really supports this out of the box. And importantly, they can process retroactive rate adjustments, right? So if your provisional billing rates differ from your year-end actuals, the system can handle that recalculation and apply the adjustments across projects, right? So that's really a major audit readiness factor. If we look at FAR-driven reporting requirements, when you work in the defense space, your ERP must be able to support compliance without with contract clauses. And a classic example is like, limitation of cost or limitation of funds clauses, right? These clauses really require the contractor to track funding levels, monitor burn rates, compare actuals to budget, and notify the government really before, exceeding allocated funding. Traditionally this is like a mashup of spreadsheets and tribal knowledge, right? And Creative solves this by leveraging Epicore's, built-in tools. There's one called the Business Process Management or BPM and Workflow Engine. And those tools really allow you to build automated notifications, approvals, and controls so you can enforce compliance inside your operational system. What does this mean? It really means fewer missed notifications, fewer surprises during incurred cost audits, and really more reliable auditable processes. Last on this system visual, we can talk about the cost of goods sold and importance of splitting, direct cost elements, right? Government contractors need to really be able to differentiate direct labor, direct materials, applied burdens, not only for internal reporting, but also to support DCAA requirements and cost reimbursable billing. And so, this level of cost visibility is essential for accurate pricing, indirect rate management, and ultimately audit support. So all of this kind of sets the foundation for stronger estimating and more defensible forward pricing proposals. And overall, the whole point of this slide is that Creative doesn't just install ERP software; they really configure Epicore specifically to operate within the guardrails of FAR, DCAA, and GovCon cost principles. So that's why the partnership with our clients and Creative works so well. for the business. This next slide kind of focuses on really one of the more important areas for government contractors, right? Project management and revenue recognition at really both the contract level and the project level, right? Government contracting isn't like commercial manufacturing where revenue is typically tied, directly to shipments or deliveries. GovCon revenue is tied to contract terms, funding profiles, and allowable cost structures. That really means you need visibility not just at the job level, but really the contract level where CLINs and SLINs can roll up into a single funding instrument. So, Epicor combined with Creative's GovCon framework really support that dual structure. So you can really evaluate performance at the individual project level, and also understand how each project kind of contributes to contract level health. One major challenge for contractors, is really ensuring that billing aligns with the specific contract type, right? Whether it's cost reimbursable, T&M, fixed price, or kind of a hybrid structure. And the system shown here supports all these models by accumulating costs at the appropriate level and then applying the correct billing logic. So what does that mean? So you don't overrun funding, right? You don't violate limitation of cost and funds clauses. You have consistent traceable support for every invoice. Revenue recognition is really an area where a lot of GovCon orgs struggle. Especially with fixed price development work or multi-year contracts. So Epicor itself supports a ASC 606 compliant revenue recognition, right? And allows you to really recognize revenue based on cost to cost, percent complete, milestones, shipments, or manual adjustments if required. So the grid you're kind of seeing here on the screen breaks out labor, burden, subcontract, materials, other direct costs, and indirect burdens. So really, so that revenue can be recognized accurately and tied back to true cost elements. So, this level of detail is critical for audit readiness too. When DCAA comes in, they ask, how revenue is recognized or why a particular invoice amount was calculated a certain way. You can show the system that can trace every number back to a cost element in a recognition rule. So, and really with Creative's configuration, you get repeatable processes where revenue is recognized consistently, adjustments are tracked, and the full audit history is preserved. And the goal here is also reduce manual spreadsheet work, right? It reduces audit risk, and it helps leadership understand contract performance really in real time. So, a real world example, thinking of a mid-sized defense manufacturer, not a huge prime, contractor, but a solid supplier in a tier 2 or tier 3 space. This one I'm thinking about was growing quickly, winning more complex programs, starting to see more cost type and flexibly priced work come in, right? And behind the scenes, they're really relying on legacy systems and spreadsheets to handle really some of the most critical compliance functions, right? I've seen it before, a small becomes a large and they're still working as a small, closely held business. And, labor distribution is being manually reconciled at month end. What does that mean? Well, if labor entry was miscoded, nobody caught it until weeks later. Their job costs, payroll, and purchasing data were all in separate systems. Their finance team spent a ton of time cleaning and stitching together reports whenever DCAA asked for something, right? And really, as you can imagine, that creates a ton of audit pain points. And it wasn't that the company was doing anything wrong. It's just that their systems made it difficult to prove compliance. And that's really what audits are all about, the ability to demonstrate consistency, traceability, and control. So, they made the decision to transition to a fully integrated ERP, designed for A&D manufacturers. And it wasn't just an IT upgrade, it was really a transformation of how the entire company operated. So, in that case, their month-end close time dropped by like 40%. When they went into their next DCAA audit, they were in a much stronger position. They passed with no, audit findings. So today their ERP is really has become the single source of truth. Not just for accounting, but really for operations, program management, estimating, and cybersecurity alignment. So, it's like when we talk about compliance, it's easy to think of it as an accounting exercise, something that only matters during an audit. But in reality, noncompliance is a business risk, right? And the defense supply chain, it can kind of become a strategic risk really, really quickly. The most obvious impact is audit findings and disallowed costs, right? If DCAA or DCMA identifies an issue, whatever it is, labor mischarging, unallowed expense, insufficient documentation, inconsistent indirect rate application, the government can simply refuse to reimburse those costs. And that hits your margin immediately. And depending on the nature of the issue, you may also have to restate prior billings or absorb costs internally that were expected to be recoverable. So, even small disallowances can add up over time, especially for companies working on tight margin fixed price contracts, right? And then there's the issue of payment delays and cash flow impacts. And so if auditors have concerns about your systems or billing accuracy, they can hold invoices, freeze progress payments, require additional substantiation before releasing funds. Some companies I've seen experience weeks or even months of delays because the government is waiting for corrections or additional documentation. So, the thing that doesn't show up on the financial statement, I always like to remind clients, is really, that matters just as much is really trust with contracting officers. The COs and program managers remember which contractors consistently submit clean data and which ones cause headaches, right? So your reputation really follows you from contract to contract, and especially within the same agency or program office. If you develop a pattern of findings, the auditors are going to, they flag your systems as weak. The government could view you as a higher risk supplier, and then that influences award decisions, and that a lot of companies have significant issues there. Your overall standing in defense supply chain, the primes are under a lot of pressure to really ensure the suppliers are compliant with FAR, DFARS, CMMC, NIST, requirements, and you don't want to be on their radar for the wrong reasons. So really, one of the biggest advantages that manufacturers have today is that modern ERP systems can automate areas of compliance used to create tons of pain. And 10 or 15 years ago, a lot of the key compliance activities in A&D were handled manually, right? The manual processes created inconsistency, and if you embed indirect rate and cost pool logic into the environment, you have all of that built right into the system, so that when the cost hits the job, whether it's labor, material, overhead, subcontractor work, the system automatically applies the correct allocation. So, real-time job cost tracking and built-in audit trails, like we've talked about already, is key. You can see labor hitting the job before material is being issued. You can see overhead pools being applied, all really in real time. And every one of those transactions has a complete audit trail. So automated approvals, workflow governance, it's a huge area for improvement for manufacturers. Instead of paper travelers and email approvals or Excel-based authorization logs, the ERP enforces the rules. Another kind of large shift that we're seeing in really A&D compliance is the move from periodic checks to continuous monitoring, right? So the strong compliance program isn't just something you kind of dust off once a year when the auditors show up. It's really something you actively manage, just like production performance and delivery rates and quality. If we start with compliance KPIs and dashboards, right? Forward-leaning contractors are creating dashboards that track the same compliance metrics that auditors really care about, right? What are those? Labor charging accuracy, time card completion rates, cost transfers, right? Material variances, indirect rate trends, CUI access logs, right? And if the leaders in the organization can see those indicators in real time, not weeks later, it becomes a lot easier to intervene early, ask the right questions, and really correct course before the small issues become systemic problems, right? On ongoing indirect rate monitoring. Indirect rates are never just set it and forget it, right? They kind of shift throughout the year based on headcount, production volume, overhead absorption, material spending, facilities costs. And when companies wait until year end to recalculate their rates, they often find that they've been over or under recovering for months without realizing it. A modern ERP system can let you watch those trends continuously through KPIs. You can see pool activity, base fluctuations, run what if scenarios, and spot the kind of the early signs of rate volatility. And that's really valuable when you're working for, with long-term agreements or cost type contracts. Tracking audit findings and corrective actions. Every company gets findings at some point. What really matters is what they learn from them and prevent them from happening again, right? Embedding compliance into daily operations. That's really the key differentiator. Instead of kind of adding additional steps or extra paperwork, compliance kind of becomes part of the natural workflow. Time cards must be completed daily, because the system requires it, right? Labor can't be charged to an unauthorized project because the system won't allow it. Approvals can't be skipped because the workflow enforces them. Cost transfers can't just be haphazardly posted without a documented explanation because the ERP requires justification and leaves an audit trail. So when compliance is really embedded that way, the organization is kind of constantly course correcting in real time. So I'm going to do a quick, real quick on CMMC. I know we're coming up on time here, and I have a handful more slides, but really, CMMC 2.1 becomes effective in 2025. The new requirements kind of begin appearing in new solicitations starting earlier this year, and there's a full 3-year phased rollout beginning through 2027. By the end of that rollout, certification is going to be required for essentially all new DoD contracts that involve controlled unclassified information. So this is no longer theoretical. The clock's officially ticking on this. With that context in mind, cybersecurity has really become one of the core components of compliance for A&D manufacturers. So if you're handling CUI, your cybersecurity posture is now directly tied to your eligibility to bid, perform, and stay in the defense supply chain. So, CMMC itself is probably its own hour-long kind of webcast. So I'm going to just kind of gloss over that to note that it's a big area and it can be built into the system itself. So, one of the key messages that I always try to emphasize with A&D manufacturers is really that compliance and performance are non-competing priorities. And in well-run organizations, they actually reinforce each other, right? And when your ERP and your processes are structured correctly, the exact same data that supports compliance becomes the data that drives better operational decisions. So I think you can see kind of the theme here. So building a compliance roadmap, the goal really isn't to overwhelm the organization. And we've got just a handful of minutes left, so I'm going to go quickly, but maybe we can do a follow-on as to next steps. The first step is to access your current system maturity, assess your current system maturity and documentation gaps, right? Do a gap assessment. And that establishes the baseline. What are your cost pools? Are they set up correctly? Is labor being charged correctly? Do you have audit trails? What does it look like? What does good look like? What does steady state look like? What is it now? How should labor approvals work? How should data flow between engineering, ops, finance, and compliance? The next step is, phase improvements over 12 to 24 months, right? It's not arbitrary. You got to level set on timeline. It does take some significant time to implement any changes, especially in an ERP system. And none of this really works without leadership and alignment and communication. There's a question in the chat: how do you get leadership buy-in for compliance or ERP modernization? We can talk offline about that, but it's really, a reminder that compliance is not, if you're in finance, compliance isn't just a finance initiative. It's not an IT project, right? It's not something that quality or the program office can solve alone, right? It really requires buy-in across the entire leadership team, because it touches every aspect of the business, from how engineers release designs to how buyers place POs to how supervisors approve labor, and really to how accounting closes the books. So communication is key. And I think if you can articulate, to leadership, some of the operational benefits of compliance, like we've been discussing, you'd have a much easier buy-in from leadership. And, when we talk about a compliance roadmap, we're really talking about a strategic journey. It's not a one-time fix. It's about aligning systems, strengthening controls, and really creating predictable, well-governed environments, right, that support growth and audit readiness and really operational excellence. So you go through this quickly. Preparing your org, we talked about the gap assessment. Mapping workflows to contract requirements is a huge part of this, right? Engaging your finance operations and IT teams together, and then you prioritize high risk areas first. I would say that at a high level, those are your work streams. A lot of detail behind it, but those are the work streams. Next steps. One of the things I always like to emphasize is really that compliance improvement doesn't have to be overwhelming, right? You don't need to flip the entire organization upside down. You don't need to, a massive multi-year transformation on day one, right? The key is to really approach it in a structured, intentional way. And really this 4-step model here is the path that we see most successful organizations follow. You do a system compliance diagnostic. You just assess where you're at. Define the required process controls and reports, right? Build a phased implementation roadmap, and then you measure progress and you adjust it regularly. So those are the very high level, next steps that you can go through. I'm happy to meet offline with anybody to go into greater detail on that. So as we wrap up, I want to leave you kind of with these 3 points, that really ties everything together. So first, compliance readiness drives competitiveness, right? In today's A&D environment, really becoming compliant isn't just about passing an audit. It's a signal to prime contractors and agencies that you're a reliable, low-risk supplier, right? Companies that can demonstrate strong systems with clean data and predictable performance have a real advantage. Second, technology and governance have to move together. And that answers part of the question in the chat. You can't maintain compliance without, updating tools or connecting processes together. And modern ERP systems, really combined with clearly defined governance, create that consistency and traceability. And then last here, you start preparing before growth accelerates. That's the key point. Firms can take action now, assessing their systems and building controls now before explosive growth happens. And these 3 ideas really capture the theme of today's conversation in a nutshell. Compliance doesn't need to be a burden. It's really a strategic enabler. And the earlier you invest in it, really, the more it pays off. So I really appreciate everyone listening today, and happy to, set up time with anybody one-on-one to brainstorm or noodle on really anything pertaining to this subject or anything else GovCon related. So, and thank you so much to Creative and Mary Chris for having me today. So thank you so much.
Thank you, Rich. Terrific. And thank you all for attending and giving us your time today.